Last week, First Majestic published their second quarter financial results. And while the stock initially opened in the green, it ultimately fell into the red after the price of silver fell below the $38 handle after some PPI numbers were released. It was a volatile week for precious metal stocks. Even still, the second quarter was a strong one for First Majestic. The results marked the second consecutive quarter of record quarterly revenue, while new records were also set in terms of EBITDA, free cash flow, and the current treasury position. Market volatility aside, this is a name that has demonstrated very strong results through the first half of 2025. Let's dive in. First Majestic in the second quarter posted record top-line revenue of $264 million, which was an 8% improvement from the record $244 million posted in Q1, and a 94% improvement on a year-over-year basis from $136 million in Q2 of 2024. That top-line figure follows the sale of 7.5 million silver equivalent ounces in the second quarter at an average realized price of $34.62 an ounce, as compared to 4.8 million equivalent ounces at an average price of $27.81 in the prior year period, an improvement of 57.8% and 24.5% respectively. That revenue figure also includes the sale of 232,000 ounces of silver at First Mint, more than double year over year, generating gross revenue of 7.8 million versus 3.3 million in the year-ago period. Mine operating earnings, meanwhile, improved from 15.5 million to 49.4 on a year-over-year basis, which, when excluding non-cash depletion expenses, grew to 101 million. Net earnings, meanwhile, amounted to 57 million, or 11 cents per share, an improvement of 105 million on a year-over-year basis from a net loss of 48 million, or 17 cents per share. That figure was boosted by a $40 million non-cash deferred income tax recovery in the second quarter, which, when excluded, resulted in an improvement over the $6.2 million net income figure posted in Q1 of 2025. Adjusted net earnings totaled out at 18.4 million, or 4 cents per share, versus an adjusted net loss of 20 million, or 7 cents per share in Q2 of last year. EBITDA set another record for First Majestic this quarter, coming in at 120 million versus 21 in the second quarter of 2024, and 99 million in the first quarter of this year. On an adjusted basis, EBITDA grew even further to 125 million as compared to 26 million in the year-ago period, and 110 million in the prior quarter. In terms of cash flow, operating cash flows before non-cash working capital and taxes improved from 24 million in Q2 of last year and 110 million last quarter to 115 million this quarter, which was yet another record for First Majestic. While free cash flow also broke records at 78 million versus 6.4 million in the year-ago period, with that figure despite making a $31 million cash tax payment over the course of the quarter, which means First Majestic is generating plenty of cash to reinvest in their business. In addition, they returned $5 million in capital to shareholders. First Majestic repurchased a total of 506,000 common shares at an average price of $7.94 a share, while the company also declared a dividend of 0.48 cents per share for shareholders of record as of August 29th. Finally, First Majestic's cash position sits at a record 510 million as of June 30th, consisting of $385 million in cash and cash equivalents and 125 million in restricted cash. Total liquidity sits at a record $584 million, including 444 million in working capital and 140 million on an undrawn credit facility. Turning to the production data, First Majestic in the second quarter produced a total of 7.9 million silver equivalent ounces, which was an increase of 48% on a year-over-year basis from 5.3 million silver equivalent ounces in Q2 of last year. Year-to-date, production sits at 15.6 million ounces, with 55% of all revenue having been derived from silver, the highest amongst peers. Broken out, production consisted of 3.7 million ounces of silver and 34,000 ounces of gold, as compared to 2.1 million ounces of silver and 39,000 ounces of gold in the year-ago period. On a site-by-site basis, San Dimas was actually the largest producer on a silver equivalent basis in the second quarter, with production of 2.5 million silver equivalent ounces. Los Gatos came in at second on an attributable basis at 2.4 million equivalent ounces, while Santa Elena produced 2.3 million silver equivalent ounces, and La Encantada produced 633,000 ounces. In terms of costing, on a consolidated basis, cash cost per silver equivalent ounce totaled $15.08, which was down 1% on a year-over-year basis from $15.29 an ounce. while all-in sustaining costs fell 3%, dropping from 21.64 to 21.02 an ounce. The decline here was driven by the addition of Los Gatos to the mix, which is a low-cost producer that boasts cash costs of just $12.44 an ounce, alongside a 17% production boost at San Dimas, which lowered per ounce metrics. As far as guidance, while First Majestic didn't make any mention of it within their associated news release, guidance was raised early in July in line with the release of Q2 production numbers. Production guidance is now calling for 30.6 to 32.6 million silver equivalent ounces in 2025. The lift here moves the guidance midpoint from 29.5 million ounces to 31.6 million ounces, which is a bump of 7%. Improvements are expected across the board from all operating mines. As far as costing, cash cost guidance has been lowered from a range of $14.10 to $14.86 to a range of $13.94 to $14.37, reducing the midpoint by 2.2% to $14.16 an ounce. While AISC guidance has narrowed from a range of $19.89 to $21.27 to a range of $20.02 to $20.82, lowering the guidance midpoint by a quarter percentage point to $20.18 an ounce on a consolidated basis. All right, so let's wrap it up. The second quarter of 2025 saw another strong performance from First Majestic, whose recent acquisition of Los Gatos is having a material impact on the results. While the share price may not have responded as many may have hoped for last week, the reality is that if they keep their head down and keep operating effectively, eventually it will respond, even if a bit delayed. The current silver environment continues to improve, and that means that the financials of this name will continue to improve as well, which means further record-breaking results. A temporary blip related to some macro data is nothing to worry about as far as I'm concerned. All right, everybody, thanks for watching. As always, if there are stories you want us to cover, please let us know in the comments section. If you like this video, do me a favor, smash that like button, subscribe, and ring that notification bell. Also, if you want more mining content, check out our website over at thedeepdive.ca. All right, everybody, thanks for watching.